What's going on, traders? It's Edward with Crypto University, and in this video we're going to be talking about multiple time frame analysis and how it can help you plot your entries and exits better to be more successful when trading. So multiple time frame analysis is an analytical concept that can be powerful when you use it the right way. The idea is to observe different time frames on the same currency pair to identify trends and behaviors that you might not see if you were just looking at one time frame. A lot of professional traders understand the benefit of multiple time frame analysis and use a top-down approach. So, example, if you're a day trader, you wish to trade the 1 hour time frame, then the larger time frame you'd be looking at is the daily time frame, and then you would zoom in to see smaller time frames to identify your support and resistance and make your entries and exits. Using 3 different time frames usually provides for the best combination for reading a market's price action. The first time frame to consider is the bigger picture. If you're a day trader, you want to observe the daily time frame to see what the trend is, to identify support and resistance, and to make sure you're not trading into a downtrend, because we want to trade with the trend as the trend is our friend. So using multiple time frame analysis, we will try to determine our trends by drawing trend lines, connecting low points to low points, and high points to high points. Before we get into any indicators, let's connect our lows to our lows and our highs to our highs. So we can see a clear price channel, as a clear uptrend price channel is formed here. We're finding short-term resistance along this line. Right? So we're watching for this outbreak. As we can see within this candlestick, price struggled to determine where it was going to go. In this candlestick is adhering to the downtrend that has been formed by the previous candlesticks. So we will take a look within here to see what is our dynamic support and resistance. So let's zoom in and look at the hourly now. We can see that price is struggling to break out of this downtrend it has formed, and that safe bets are along the bottom of the trend line, continuing towards the top. Now, if you want to look more close at this still image here, you can see we are finding support along this line. So we look to be finding support here. And we seem to have broken previous resistance here. So we could call this a safe support zone right here. Now, it would be optimal for us to see and wait if price is going to continue along this channel line here, or if price is going to adhere to this downtrend line and revert back to this support line. Now, you can confirm support or resistance by seeing if it has touched the line more than once. And you can see here we have entered this support zone a few times, here, here, almost here, and here. So it's safe to say that this channel could be broken at this point and price revert back to this direction towards this support line, in which we can look to make an entry for our trade in these zones. So if you zoom in just a little bit better and you want to try to take advantage of a scalping position, you could actually see here where price is battling this uptrend line and this downtrend line. You can start to short here, back towards here, and you can start to long here, back towards up here, until your trend is broken. Because one way or another, this wedge is about to break, down or up. And you can help identify these scenarios by using multiple time frame analysis. Because if you just jumped straight into this and didn't have any of these things that we had saw here, and you were just looking at the 15-minute time frame, so if you were just looking at the 15-minute time frame here, you could be fooled into thinking this was an uptrend, and you might take a position here and actually get faked out by this divergence and end up hanging on to a losing position if price were to continue in this direction. That's why it's important to use multiple time frame analysis, because again, backing out, you can see obviously that the price of this asset has climbed very high very suddenly. So we can expect to see some divergence here and actually look to set up support and resistance here. That looks like a good flag. So if I had to gamble on this based on the daily time frame, I would say price is going to revert back to this dynamic support line, and then I would wait to make my entries along the 1 hour and 15 minute time frame. So zooming back in, I could see how that downtrend angle looks again, and we could see that right now, just based off price action, price is overbought and needs to come back down to this line before we can consider any buys. Before we can consider making an entry into this, price needs to come back here so that we can scalp to make anywhere between, ooh, that's a big one, looking at 20% within this wedge. So that's easy money when you can identify things like this, and it takes multiple time frame analysis to identify them. If you look up into other indicators like the ADX, you can see that price is trending upwards. Here would be considered overbought. So ADX around 40 is a kind of overbought. It needs to come back down a little bit, as this trend would say. If you turn on your EMAs, you can see that we have a cross forming here. And if you know about EMAs from our blog articles or in some of our other content that we publish, you know when an EMA crosses that it will ride those lines. So we're looking at a possible trend reversal based off the EMA. Then we turn on our nitrous bull indicator, and nitrous bull gave us the bear call, so we should wait for nitrous bull to give us a bull call. So that's how you can apply multiple time frame analysis to your trades, and then also stack on other indicators to confirm or deny a trade's position. If you don't have our nitrous bull indicator, we'll leave a link to that in the video as well. And most of these other indicators that you see on here you can find on TradingView. So this is what it would look like if you just had nitrous bull on. It gives you the bull and the bear signals. So you can see here we'd be waiting for a bull call on the 15-minute time frame to take our entry. And nitrous bull is actually mapped our dynamic support at 0.012. If we take a look on the daily time frame, we can see nitrous bull has not given us a bear signal yet. And our last bull signal was over here. So from nitrous bull signal, that's a lot of profits, man. If you wait for that bull signal to close, even if you started at the next candle, man, that's a lot of profits. Zooming back into 1 hour time frame, you can see nitrous bull has the bear call on the 1 hour time frame, so we'd still be waiting to get to a bull signal from nitrous bull. And nitrous bull has also mapped dynamic support on the 1 hour time frame, just about where I called it prior to having looked at any observations. So you can see this is where nitrous bull would put its support zone. This is where I called my support zone. Pretty freaking close. So this would be a good buy zone for this asset. Alright guys, so that's how you can apply multiple time frame analysis to your trading and pile indicators on top of it as well to confirm or deny a trade's position. Thank you guys. Hope y'all have a wonderful evening. Good luck in your trades.